Good evening, everybody. Every time you borrow money, you're robbing your future self, as quoted by Nathan. Well, some among us have experienced it or have an opinion on borrowing, which we end up thinking.
The habit of saving is in itself an education. It fosters every virtue, teaches self denial, cultivates the sense of order, trains to forethought, and so broadens the mind. With these wise words, I, Vashini,
And I, Hirak,
are proud and happy to host the glorious Financial Conclave as a part of our flagship event, Redux 15.0.
on behalf of Money Matters Club, the official finance club of IBS Hyderabad, we welcome one and all. The topic for today's discussion is navigating credit expansion post COVID.
Before we start, let us give you a glimpse of how this year's Redux was organized and managed, marking our 15th anniversary. Muskan, can we have the video, please?
Welcome to Redux 15.0, organized by Money Matters Club, the official finance club of IBS Hyderabad. Redux is an annual event where we dive deep into the world of finance and explore the unexplored. But this time, there is a twist. We take Redux online, where hundreds of people will join us virtually. The 3 days event will comprise of many activities, such as financial conclaves, where industry experts will enlighten us with their thoughts. And online games based on financial concepts that require strategizing and brainstorming to succeed. Come, participate, play, win, and learn, and stand out from the crowd. Witness as we checkmate every odds and prepare for a better tomorrow.
We are all aware that this period of the unprecedented COVID 19 pandemic has created tremendous challenges.
Evolving risks associated with the COVID are forcing risk managers, credit analysts and lenders, portfolio managers, regulators to reevaluate how they manage and measure credit risk. We are really honored to have veterans from the world of finance who have extensive knowledge and experience in the industry to be our panelists for today.
We welcome the first guest for the evening, Mr. Kishore Kharad, former MD and CEO of IDBI Bank, Indian Bank, and presently working as principal partner at Amro Bucons. Sir is an approved banker with 41 years of rich and professional banking experience. Mr. Kishore was also director at Exim Bank, executive director at Union Bank of India, director at ADFIAP, and also the president of Entrepreneur Development Institution of India.
Next, we have Mr. Tushit Malhotra. He is presently Vice President, Private and Commercial Business at Deutsche Bank. Sir has been business leader with an years of experience and ownership into the business, revenue and cost management with an expertise in all gamut of commercial banking, client management, team leading, and business delivery. Mr. Malhotra's specialties are trade finance, forex, SME banking, credit, working capital, to name a few.
Next, we have Mr. Indranil Chakrabarti, presently Senior Vice President at Credit Suisse. Sir has been Senior Manager of Finance and Head at Standard Chartered Bank. Mr. Indranil was Senior Financial Analyst at Gulf Bank, gave an excellent contribution as team leader at Unilever, and worked as Finance and Business Manager at White Light Advertising Private Limited.
Our next panelist is Mr. Chaitanya Reddy, Assistant Vice President at Barclays. Mr. Chaitanya had a key contribution as a credit manager before he took up the responsibility for the current role. His skill set include credit risk and analysis, corporate finance, portfolio management, to name a few.
Now I welcome the one who is an esteemed adjunct faculty of ICFI Business School, our moderator for the day, Mr. Dipesh Deepu, Managing Partner and Principal Consultant at Genesee Management Consultants. He specializes in energy, natural resources, and infrastructure. He also has an expertise in market entry strategies, project appraisals and financing, performance improvement mergers and acquisitions.
Before we begin, we would like to highlight that the views expressed by the panelists are personal and do not represent any of the organization. The participants are requested to turn on their videos and keep their mutes muted. If they have any doubts or questions, you are free to put up in the chat box, which will be taken up in a timely manner. Over to you, Dipesh sir.
Thank you so much. I'm first of all honored to moderate this panel, and thank you all the panel members who are here. We welcome you on behalf of ICFI Business School, and on my personal behalf, it's my honor really to interact with you. And today we propose to spend another hour and a half talking about some of the important issues that faces the banking and financial services industries. So please feel free to express your opinions as you would like, as we have already disclaimed that opinions are your personal opinions and they have nothing to do with organizations you are associated with, right? So let me begin by asking you a very important and personal question. What do you think is going on in the industry that keeps you awake in the night? As a banker, what keeps you awake in the nights? Maybe we can start with Kishore sir first.
Okay, thank you, Mr. Dipesh. First of all, let me tell the audience and all the panel, my co-panel members, that I myself was doing my MBA through ICFI, and I have done my MBA through ICFI. So this is a homecoming platform for me, and I'm really privileged to have to be on this panel. Insofar as keeping awake at night, on me as an individual, now I am a retired banker. When I was a banker, of course, there used to be a lot of concerns, but I not retired very long ago. I can tell you what concerns bankers must be having in their mind is this is a kind of pandemic which actually very unprecedented pandemic. Nobody today has experienced in their personal lives this kind of pandemic. And as a banker, when we are working in the financial sector, we have never seen this kind of prolonged lockdown or you can say depressed conditions in the economy throughout our life. Whatever we have our projections about the economy and all, normally what we say is a going concern and the concern which is going through stress insofar as our clients are concerned. So here the economy itself is under stress, and therefore all the bankers particularly are worried about the status of their borrowers, whether it is going to remain good or not. And obviously the kind of impact this pandemic has put on the entire economy, there is not a single sector which is not affected. There is not a single individual who is not affected. And those all effects, adverse effects, are so draconian that many of these our clients or organizations are actually having existential threats. Many of them are exposed to such risks that it is very difficult for themselves to find out whether they will be able to continue or not. Under such circumstances, bankers being a custodian of public money, even though we are actually lenders, major lenders in the market, we don't lend our own funds. These funds are normally from the public. And as a custodian of public money, there is always a pressure, a moral pressure on us to see that how these assets are running and functioning so that the depositors' money is kept safe, depositors' money is returned along with interest. But looking at these stressful situations, when the stress is there in the economy, thanks to the various steps taken by our regulators and various steps taken by our government of India also, that we are still able to keep many of our organizations, many of our businesses afloat. The Reserve Bank of India came out with a moratorium, and because of that moratorium, presently, at least subsequently, there was a Supreme Court ruling also that no account should be actually downgraded during this pandemic until further instructions. So therefore, we really don't know what is the situation once these restrictions are over, once this moratorium is over, what exactly we are going to see, and that must be bothering my banker colleagues at this point in time. I will stop here because my bankers colleague also can express their views. Thank you so much, Mr. Speaker.
Sure. Would Chaitanya like to go next?
Yeah, sure, Mr. Dipesh. Yeah, I think Kharat sir actually summarized it very well. I think, see, the amount of uncertainty we have, amount of uncertainty under which we are living actually, keeps us awake every night, as simple as that. You see, and the very unpredictable, the business have become very unpredictable. Whilst, even the best of the banks, we can boast about saying we have very robust, internal credit assessment mechanisms, etc. All of these mechanisms are actually being put to test. This pandemic has actually put everything to test. So as a bankers, we are having to constantly revisit our policies, our assessment methodologies, our appetite, risk appetite, etc. And of course, I mean, staying very close to the businesses as much as possible, right? I mean, we are having to constantly review the accounts because asset quality remains a key concern now, given the circumstances. I mean, see, even one bad account, can have a huge impact. And as Kharat sir said, I think it's the public money, that we are lending, based on. So we have to be very, very responsible, very, very conscious on the steps that we are taking. And I think regulators, keeps us, on our toes every day, every night. I mean, constant reviews, constant meetings, constant changes in the policies. So lots of things going on. Very, very dynamic world. Very, very unpredictable world. That's all I can say. Yeah. Even now, I think we've been close to 9 months into the pandemic. I think it's fair to say we are nowhere close to coming to any sort of conclusions. Okay, fine. Maybe next 3 months, or next 6 months or 9 months. Okay, we are going to see a better economy, better world. So yeah, in a nutshell, that's what I wanted to share.
Indranil, would you like to go next?
Yeah, hi. Thanks, Dipesh. Well, your question was what keeps me awake personally. So yes, in the context of what we are discussing today, I am from a banking background so many years. Now I'm into risk and controls in a group finance role in my organization. We were all used to a certain way of working, closely knitted, sitting at one place. We knew each other's behaviors, how they were functioning, from their frowns, from their voice modulations, from their shrugs, from how they were walking away from their seats, from how they were closing their laptop lids. And as managers, these were important non-verbal cues of what was going on in their lives. Today, in this work from home situation, I don't know what's going on in the minds of our colleagues. If I don't know that bit, that is even more difficult to fathom what is going on in the minds and world and lives of so many people who are used to meeting to get business, for business to evolve, to flourish, to continue. Virtual world is something which we didn't know. I mean, we knew it in these forms of panels, etc., but not really in the real economy, virtual world. And this is an initiation by fire, I would say. We are going through an experimentative phase. We think we are coming out successful. We don't know what the end product will be, whether we'll be better off or not, only time will tell. We don't know how much opportunities we have lost. And these are the things which keeps me awake, in the sense that if I don't know that something wrong has happened, is it really that something wrong has not happened, or is it that we are not able to figure out that something wrong has happened, and that will all come and sort of like a waterfall fall on us when things become normal, when people have gathered back their lives, when they can figure out how they were used to doing, they will find out, well, this has gone wrong, that has gone wrong. We don't know unless, see, we don't know what we don't know. And that's what keeps me awake at night, that not knowing a problem, is it a forebearer of good news, or is it a forebearer of even worse news? At this juncture in this new world, this is something which really keeps me awake. And another thing I will say is, I know this is unprecedented, but what I have read in a little few years back has really transformed my life in a way that I don't think anything today is actually unpredictable. You should not expect something. I have read the book, the Black Swan. If you have ever, anybody have read the book, The Black Swan, I mean, I think if you really read it, it has been a life transforming book for me. If you really read the book well and really read in between the lines, it clearly says that what hasn't happened today or yesterday, the chances of that happening tomorrow is even higher. So let's all be aware that what hasn't happened is the order of the day that is going to happen. There is no way to predict or to be safeguarded everywhere, but we can take little steps to be as safe as we can. So that what keeps me awake still keeps me awake, Dipesh sir. I'll pause here and let the panel continue.
Tushit, is there anything that keeps you awake?
Oh, yes, a lot of things actually. First of all, thanks, Dipesh, for the question. And I'm also an IBS alumni, so it feels quite nice to be, back in this. So, see, as a banker, our main job, or as a lender, our main job is to meet customers, engage with them on a regular basis, assess their businesses, which is something which is lacking due to this lockdown and extended stop and start model that today it is opening, tomorrow it is closing. So this is something which keeps me awake at night, that I don't know of my client's business. Earlier, if I am unsure of a client, if I'm getting some cues from the client, I would visit the client's factories, check his stock levels, check his inventory, satisfy myself from a lending viewpoint. Today, that thing is missing. I can't meet the clients. I can't, have a control on their business. What I can just see is that they're also working behind their laptops, and I don't know actually the on-ground situation. Are their payments stuck with their clients further? Are they using the funds given to them appropriately in the fashion as a banker would desire, or they're able to churn their stock well? All this uncertainty is something which, as a lender, give me really goosebumps at this point in time, because right now the regulator has said that we can't declare anyone NPA. We really can't pressurize them for interest payments due to the moratorium period. So once things clear out, I don't know what will be my since I am from the SME background, I don't know what will be my clients future will be after 3-4 months, 5 months, when things start doing better. So these uncertainty really keeps me awake. And also very importantly is, in a banking business, you get cues from your team, from your colleagues. When we don't see them for months, when we don't see them for extended periods, it really gives us jitters. How will we plan for new business? How will we plan to generate more business for our bank, for our institutions, for which we are there. So even the strategy part of the new business and managing the existing business is both quite challenging at these times, which is a real cause of concern. But as with the concern, there comes opportunity, which we'll discuss more as we go through the discussion in the next hour or so. Yeah.
Sure. Thank you so much. So I have another generic question. We have seen a couple of banks actually fail in the recent past, and on social media, you see a lot of people raising their voices and asking if our deposits are safe. And then eventually, as investigations progress in all of these cases, then it is discovered typically that, risk management process and credit worthiness of or exposure to one particular large business house was disproportionately high. So things like that. So what's your opinion? Has this pandemic actually in some sense exposed some of the existing lacuna that existed in the banking system, or is it more a manifestation of what's currently going on? Maybe we can begin with Indranil.
Yeah, thanks. Thanks, Dipesh, for the very interesting question. Well, my opinion is this might have quickened the expose, not necessarily caused it, because something which is inherently right and strongly rooted in the fundamentals, a COVID would not have brought out such a drastic outcome of that institution in so short a time. The institutions that you mentioned, I'm sure if you go back to the financial history, it is not a matter of a few months that has accumulated that problem. That problem manifested many, I would say at least 5 to 6 years ago at an average. And there were enough signs and opportunities to arrest them, at least to curtail the impact. What COVID has actually may have done is hurtled that whole thing out into the open, because COVID is exposing many things which were hitherto not known to us. People are not willing to suppress things at this juncture. And that is my view, that fundamentally it is not COVID which has caused it. There are other fundamental issues, because otherwise their instances would have been much more. COVID has impacted almost everybody, as we just now agreed, in larger and smaller measures. But it is the strength of the institution, the fundamentals, which has and it still is helping the others to bite through, but not such maybe weekly run or weekly regulated or weekly supervised and monitored institutions which are coming out into the open. That is my view.
Sure. Tushit, would you?
Yeah, so I kind of echo with Indranil over here. It is not due to the pandemic that these things are happening. It would have been there for quite a number of years. This is just kind of hastened the process of exposing this. But I think overall the Indian banking system and the regulatory system is quite strong, and such cases are just quite a few, and that too it is more of individual decisions which have led to this kind of a situation. Overall, I think RBI and other regulators have quite a strong control on the banking system, and they won't let at least the depositors they are safeguarding. If you see the last two instances that we have, in both the instances, depositors' money has been safeguarded. That is the priority which the regulator and the government has taken, which is as a depositor, which is quite encouraging to witness that my money is safeguarded. Maybe there could be a small moratorium attached to the overall thing, but overall the money of the depositors is quite safeguarded. And banking is a trust thing. It is completely on trust. That as a banker, I'm holding depositors' money and I'm using it, giving it to, lending it to the borrower. So it is maybe a couple of individuals, or maybe handful of individuals that has led to this kind of a situation. Overall system is quite robust, and I will again reiterate that the regulatory part of our country, is quite well as compared to other countries. Yeah.
Kishore, sir, your views about it? You are muted, sir.
Yes. Am I audible now?
Yes.
Good. So when we are talking about the failure of the banks, I think we are more focusing on the banks which have actually lost their existence. In my opinion, when we talk about the failure of the bank, if bank is failed to even perform their duty, that itself also is a failure of the banking system. Why I am saying so? Because what is our basic business is accepting the deposits and lend the money. Today, what is happening that we are accepting the deposits because our doors are always open for the depositors, but we are not lending. And if you look at the credit growth of most of the banks, big banks also are there, and I will not name any banks, but some of the banks are showing credit growth of 0.5%. Some of the banks are showing credit growth of almost 8 to 9%. But recent, every quarter, Reserve Bank of India comes out with the data. If you look at that data, they are showing it is something 5.35% credit growth. Now here we need to understand that when your yield on advances itself is above 8%, that means if you don't do anything, your credit growth should be above 8%, only by way of interest and by way of recouping whatever repayments have come. If we are showing 5.5% as an industry as a whole, that means it is a negative growth, in my opinion, notionally negative growth. So therefore, we are actually failing to do our business, and these are not only banks which are lost their existence. Now, what are the causes? I will tell you. My co-panelists have already mentioned that other than pandemic also there are causes, and all of we in the financial sector, we have observed that it's not during the pandemic only our economy has slowed down. But prior to that also, particularly the bankers, we are feeling the heat of that slowdown in the economy. So at least 2 to 3 years prior, the signals had started of slowing down of our economy. And therefore, when we entered in pandemic situation, when we entered in lockdown, we already were actually suffering from a stress. Our economy was not doing well. And therefore, the impact of this pandemic is more. And how it has impacted is there are various sectors. In fact, KV Kamath committee, which was appointed by RBI to find out how the stress can be resolved, they also have actually identified some 26, and later on one sector was added. So 27 sectors they discovered which were undergoing the stress. In my opinion, there is not a single sector which can say that there was no stress in that, except for the medical shops and groceries which were allowed to function. But even then, these are very minuscule sectors, we can say, insofar as our economy is concerned. So sectoral exposure, those banks which were having heavy exposure in particular sectors which affected more in this pandemic have actually got more affected. Then the borrower exposures. The borrowers also, because many times now what somebody was talking about, borrower exposures or corporate exposures, per party exposure limits are there, group exposure limits are already defined by the regulators. But even then, sometimes because of the proximity of some corporate houses, we tend to take exposures via different routes, and therefore we are actually victims of borrower or group exposures also. Then during this pandemic, we must have seen that some of the banks which were having portfolio mix, and I'm not saying during this pandemic, I will say during this stress period of last 4 to 5 years in the economy, and lately it is aggravated. So portfolio mix of the bank also has actually affected much insofar as their financial condition is concerned. And I can explain you, when Raghuram Rajan, who was our ex-governor, Governor RBI, when we came out with the asset quality review of all the banks, most of the banks, particularly the initial NPAs, actually were thrown up by all those banks which were having larger exposures, let's say on the infrastructure. I'm just giving an example how the sectoral exposure and your portfolio mix also makes a lot of difference in health of the bank is concerned. So banks which are heavily exposed that time to the infrastructure exposure, they were the first one to go to feel the heat of that asset quality review and throw up the maximum NPAs. So if some banks, actually those days we used to say that, okay, if your portfolio is properly spread, that is, if you are proper, you have hedged your risk by distributing your exposures to MSME and corporates, retails, individuals. I think it was supposed to be a proper mixed model. But today, what has happened? this pandemic has exposed all those our risk hedging models, because MSMEs are the first one to get hit in this entire pandemic situation, and they are actually very badly impacted. At least big corporates are not that much impacted. I can tell you their balance sheets are strong enough to withhold or withstand the pressures. But MSMEs are really finding it very difficult. Individuals, we are seeing the way the corporates have started reducing the salaries, the individuals have started losing even their employment. In that situation, exposure to individuals also was very difficult. We have seen even some sectors like housing loans. Housing loans today are actually coming more and more under stress because people have lost their abilities to pay. So the portfolio mix, which we were earlier having our own models that, okay, this kind of portfolio mix, if we keep, the bank will be floating well, our bank's balance sheet will get strength. Some people were having larger corporate exposures. All those models have failed today. And we are actually getting a lot of learnings out of this pandemic. And therefore, the stress in the economy has directly impacted, and stress in the economy, when I'm saying this pre-COVID and post-COVID also, we are still continuing under COVID. Actually, we cannot use the word also post-COVID. That has actually put up a lot of stress in the asset quality. And because of asset quality stress, most of the banks are having stress on their financial strength. Banks are finding it difficult to even protect their bottom lines. The kind of provisions are required, and thanks to this moratorium, our provision tap is actually halted for some time. But once again those provisions are required to be done, I think there is going to be a tremendous amount of pressure on the bank's bottom line. Many of the banks which are today showing some kind of profit, they are not showing out of the operations, but they are showing out of the reduction in the provisions which are required. The pressure on the provision is reduced, and therefore they are showing some kind of a net profit there. And if this situation continues, banking industry really will have a very challenging time. So the failures, we cannot blame only particular bank or particular management or particular model, particular policies what they were adopting, or niche area what they had created. Everybody is actually exposed, and everybody will have to change their models, will have to inwardly look into their models and build the guards and then come back again. I think I will stop here. Thank you so much.
Chaitanya, would you like to quickly add your views, please?
Yeah, I think most of the panel members have summarized it really well. Probably one aspect I would like to bring in here is, I think, I see these RBI. I would agree. You know, we have one of the best regulator in the form of RBI in the India. I think something that banks can really work upon is having very robust control-proof systems. I think we have seen some banks where some of the systems, because of their inherent a failure in controls, etc., has resulted in significant leakage of credit. So I think probably talks about having robust corporate governance and strong control, strong systems which are control proof, which are not people dependent. I mean we should try to avoid people interference in the process as much as possible, especially where we need stronger controls. I think that is something which I think the Indian banks need to really focus upon, which can make them at least to some mitigate the impact of people, which we have seen some of the banks which have failed. We have seen there were some people, because of some people's irresponsible decisions or whatever it is. That has resulted in this situation. Probably, I think that is somewhere probably as a regulator, RBI can also chip in and then assess the robustness of the systems and controls of each bank.
Sure, thank you so much. So moving on, what I heard so far from all of you is that there has been a systemic kind of deterioration in quality of the portfolios of credit that most of the bankers have had. But looking at what the government has been trying to do in the last couple of years and more recently after the COVID, it's always been trying to address the supply side rather than doing much about, or perhaps not even, it may not even be possible for government to address the demand side for credit. But typically now there is a greater consensus that the problem may be on the demand side of credit rather than on the supply side. But every now and then you would see the finance ministry and government at large trying to push the bankers towards more and more extension of credit, perhaps relaxing the norms and perhaps allowing more people to borrow. In fact, in stimulus plan that was announced a couple of months ago, large number of stimuli, so to say, were towards extending more credit, making credit more easier and possible. So as bankers, as those dealing with credit risks, how do you perceive, is this the right approach to solving problems, or do you think there is something more that needs to be done? Maybe we can start with Tushit this time.
Yeah, I think the pandemic has kind of changed the gamut for credit overall credit system. The way we used to assess the credit earlier, it has now kind of changed. Just to give you a few pointers, what as a banker as a bank we are doing, or kind of what a lot of other banks are doing, and also the fintech companies are helping in that. There'll be a change for reason for borrowing. Earlier, there used to be borrowings for luxury, like travel spendings, the fulfilling aspirations of travel, dining experiences, etc. I'm talking from a typical consumer viewpoint over here. Right now, it will be more of the actual reason, which are non desirous as such, but they are more of for the fulfilling of a normal need of a consumer. So the demand of those kind of loans, will come up now, rather than for a large travel or a large wedding, or indulgences, which we usually call in our banking terms. So that will kind of change. It will come to the real demand of actually buying an actual home loan than a speculating home loan. That would be one. Secondly, there'll be appetite will be changed. There'll be more demand for a small ticket size loan as compared to a large ticket size loan. The bigger loan or the big ticket loans to the corporates would kind of change to the small ticket size loans, and a lot of banks and fintechs are now focusing towards Generation Z or millennials, as we term them. So demand on that side will increase. So consumer loans will increase as such. So on the high ticket loans, lenders have to exercise their caution in such a way that their exposure on one particular industry or a sector doesn't go beyond a threshold. And more importantly, the digital lending demand will go up. So all these things, kind of bringing change to the way demand for loans will come up in the next in the next year or 2 years. So that will be kind of the focus for the banks, which will be there to meet the demand of these kind of loans.
Chaitanya, your opinions, please.
What I've seen is, as you would have come across, I think the bond market has become very, very cheap. Something that we have been observing, especially in the large corporate side, is a lot of corporates are now refinancing their debt in the form of bonds, because virtually, I think even we read UK, the bond yields were in negative, right? So I think they're trying to take advantage of the cheaper finance available in the capital markets there. That is one. In terms of the general demand, I think, I feel all the governments across the globe have done a tremendous job in ensuring, in keeping a check on the inflation, ensuring that economy is not falling into deflationary mode, keeping the asset prices intact, To that extent, they have done a great job. But then, see, the demand has to come from the economic growth, right? Which will take some time, naturally. I mean, see, we have been in lockdown mode for what 5-6 months. We are seeing lockdowns, being announced in Europe, across some countries, UK, Italy, etc., France. So unless inherently each economy starts, showing the signs of growth, we can't expect the demand for credit to increase, right? Um, I think I was looking at some statistics. I think there's especially some of the countries like India and all. I mean, if you compare the credit growth, as a percentage of GDP, it is still on a very, very lower side. So I think it's just a matter of time. I think we'll just have to give it some time for the economy to really bounce back, and then again, the growth for the demand for the credit will increase. It all depends. I think, has the government done adequately? I think so far they have done adequate job. But if the situation has to prolong for some more time, I think government will continue to step in and then announce stimulus packages. But yeah, the inherent, unless there is an inherent growth in the economy, you can't really see strong growth in the credit demand.
Indranil, please.
Yeah, thanks, Dipesh. I think your question was the measures which the government has and is taking. Do we think it's going to be effective in the short or the long run? My knowledge of credit expansion and credit in general is you can keep giving credit. It's like a beaker. If the beaker doesn't have an outlet, it will overflow. And any credit given to any industry or to any country or to any sector, it will first initially show a rebounding economy. People will start producing using that credit. But ultimately, if like that beaker, there is no way to get those finished goods out into the real end users, it will somewhere get a bottleneck situation. That initial robustness of the economy will not manifest into an overall remedy of the situation if the interests that is accumulating for the people who took the credit, that cannot at least be recovered. Because economically speaking, it's all human behavior. I cannot be buying my own produce forever. I need to have people out in the market having the money in the hand to finally take my produce, for somebody, either me or somebody, to make that produce using credit and giving it out in the market. Unless it has that channel outflow to the end users. And who are the end users? The end users are those who are having jobs or not having jobs. I think employment or the lack of it or the bouncing back of the employment figures will make a big difference to where we finally come out of all this. Because today, wherever I hear, I've seen so many LinkedIn posts, Facebook posts, please forward my, even if you can't offer me a job. I think I haven't seen that in the last so many years of my LinkedIn and Facebook profiles. People are not having jobs. If I'm not having jobs, the government can keep funding industries, can keep funding SMEs, they'll keep making those plastic bottles, but who will buy it? People will try to have and use that same old plastic bottle. They will not buy it, even if it's broken. So I'm giving a small, maybe I'm making the example very easy. It's much more elaborate and much more convoluted than that. But ultimately, it's that whole beaker concept. You must have those arms and legs for it to finally take the shape of a good economy. And I think the employability and employment figures of the country will boost that outcome more than anything else. Initially, we will look very good economy, the wheels will turn, the machines will start working, the factories will run. But again, you can counter and say if the factories are working, people are getting employment. I think that's how this whole thing will have to work back. And that's how the wheel will start running faster. So it's how quickly we can get those wheels aligned and the economy back with the employment and the credit together, that will really be the outcome of the success here.
If I can add, and I'm sorry, I missed to add a couple of things here. So Tushit touched on this very briefly. I think when we talk about demand for credit growth, I think we are seeing a lot of shift, in the nature of the funding, that banks have been asked to do. Majority of these sectors, if you see, I mean, say, for example, I work very closely with consumer healthcare, hospitality and leisure. Now, how are they trying to overcome the current crisis? Is, not through investing in capacity or expanding, right? Lot of work or lot of investment is being done on the technology side. I mean, that's where, I mean, see, for example, when we talk about wholesalers, what they're trying to achieve is, rationalize the supply chain, reduce the cost of supply, move to, sort of nearshoring or reshoring sort of models, etc. A lot of Western markets. They're investing a lot on technology, right? I mean, technology, I mean, typically banks would like to fund, uh, I mean, out of the what of the banks fund, they would like to see some asset being created, and then something uh, in the form of like a factor, etc., which they take a lot of comfort upon. When the request is to fund the technological enhancement, not many bankers are willing to lend freely to such investments. That's what I'm trying to say. I think, yeah, I mean, as a result of that, a lot of corporates are going to bond markets or even equity markets, raise more money there to fund those investments. Probably that would also be one of the reasons for lower, demand for growth in credit is something which I thought, I'll highlight. That's something which I came across, in the last 2-3 months of my experience.
Sure. Thank you. Thank you for adding that. Kishore, sir, your views. Are the government steps targeting the supply side of the problem effective, or are they going to really help?
We need to understand, Dipesh, first of all, the situation of funding to our economy. And I'm talking about Indian economy. If you look at how Indian economy is getting funded, how Indian business activities are getting funded, look at from the banking portfolio also. If you see, hardly 30% is a corporate credit. And why I'm saying corporate credit? Because there are three major sources for funding the economy. One is your own capital. Second is the capital market through which you can raise the capital. And third is a debt market. And in the debt market, majority players are the banks and banking industry. Apart from that, non-banking institutions are also there, and through capital market also, through debt funds you can raise the funds, right? Now, out of this, the majority actually is coming from the banking and financial sector. When I'm saying banking and financial, inclusive of NBFCs, because our country is actually capital-starved country. There is no much generation of capital in our country, and therefore most of the economic activities are supported by credit. There are very few corporates who can raise funds in the capital market on their strengths and on their balance sheets. Even today, we have restrictions for corporates to go into capital market. That what is their eligibility to actually raise funds from the from the capital market. So therefore, majority of the businesses, whether it is a small, medium, or big, they are depending on the banking and finance sector for their financial needs. And if you look at the debt equity ratio also from the RBI data also, and from each bank books also, you will find that debt equity ratio in India is actually much, much higher than any other developed countries or developing countries also. So that means our businesses are predominantly run on the debts. And when there is a need for the funding for revival of the economy, obviously, when one side there we are talking about there is a dearth of capital or dearth of their own money, obviously people are required to depend on the debt. And this is what rightly perhaps understood by our regulators as well as the government. Regulator created a lot of liquidity well in advance, rather before the government could even come out with the pandemic packages, support packages. The regulator created a lot of equity. The government has come out with credit guarantee schemes and all up to 20 lakh, that 20 lakh package when they came out. They have come out with even 3 lakh package for the MSMEs. So all those packages, all of we have seen, and still that it's a paradox actually. On one side, we are talking that there is a need of fund. If we look at the liquidity situation of the banking and finance sector, there is ample liquidity in the sector. Most of the banks and financial institutions are keeping their money safely with the Reserve Bank of India in reverse repo, in the repo. So today also, if you see, more than 11 lakh crore rupees are lying in Reserve Bank of India. The government, even though they have come out with these debt schemes or debt support schemes, the first scheme which was introduced for 3 lakh rupees, 3 lakh crore rupees for the MSME, and that was, we were all expecting that by 15th of October, that entire money will get exhausted, consumed. And therefore, people were saying it will be on first come, first serve basis. But even today, the money is not spent. It is hardly 1.6 or 1.7 lakh crore has been consumed. And that also, government is actually giving 20% of your credit limits or outstanding, you can say, as on that particular date. And still people are not using. That is because even though these enablers are created for the credit and for the funds, what people are fearing is there is no demand. Now, because of this economic activity, which were relaxed, and then we entered into a big festival season immediately after the lockdowns were relaxed, there was some pent-up demand. But everybody is having doubts whether that pent-up demand will have its consistency, will have its sustainability. If that is so, the businesses which are already having debts on their head, they are finding it very difficult to increase the debt. And the stress which is in the economy because of this uncertainty, they don't know. Even if the businessmen are the people who take risk, but to what extent risk is to be taken, again, they need to do a calculations, and they are doing rightfully that calculation that when already existing debt is not serviceable, not sustainable, there is no point in actually taking further debt and making it unsustainable unless and until there is a demand. Actually, when you talk to a lot of the businessmen, and particularly I keep on speaking after retirement to a lot of mid corporates and a lot of MSME entrepreneurs, all of them are starving for funds, but they are scared to take the debt. Now, how to improve that situation? That is the only one way is actually to provide them debt by way of equity, provide them funding by way of equity instruments or by way of a long-term funding wherein the interest burdens and all can be reduced. Once that is assured, I think slowly, these people will get encouraged to take the credit. So on one side, there is a demand. On other side, bankers feel that borrowers are not coming forward. Therefore, bankers feel there is no demand. But in my opinion, there is a need of funding for all the businesses. Only thing we need to understand what kind of, what kind of financial models, suitable models will be there, wherein the funds also will reach and their sustainability also can be ensured. Thank you.
Sure. Thank you. Thank you so much. So my next question is with regard to the IBC, the Insolvency and Bankruptcy Code. At some point of time, actually, it was considered that, once a loan goes bad, there's just no way to resolve the issue in Indian context. I mean, the things will go on in a loop for endless time, and then there will be no resolution. So when then IBC was formulated, people welcomed it wholeheartedly. But what we have seen in the recent past, after, in some case, particularly for power generation sector, it was even suspended by the Supreme Court order. So what do you think? Is that something, that has perhaps led in the past when it was formulated, it created some sort of optimism that, okay, now credit would be easier, perhaps because we can, the banking sector can see that these things can be resolved after all. But now the way it has got entangled between regulator and the Supreme Court, do you believe that that also is a challenge when you extend credit? Maybe we can start with Chaitanya.
I would probably ask some other time because I am not very close to IBCA topic here. Probably, someone else can pick this. Is that okay?
Sure. Any volunteers? Kishore sir, would you like to take?
Okay. See what happened. We definitely have a very weak recovery systems in our country. And the legal framework which is there at present, particularly for this kind of recoveries, and this all our recovery actually falls into civil matters. And therefore, it really takes pretty long time. Before IBC, some of my young panelist bankers must be knowing, we used to have something called SURFICE. And that SURFICE, when it was introduced in 90s, we were also very much upbeat. Similarly, I was quite young at that point in time, and we used to say that, okay, now we can recover the money within 6 months. What happened to that? SARFAESI today is practically, gone into dogs. We introduced Section 138 for the check bouncing, and many of the people were thinking that, okay, now Section 138 has come, means it has gone into criminal activities, and people will be able to recover. Even the trade creditors were thinking that they will be able to recover their money. But looking at the Section 138 cases which are piled up in all the courts, I think it will take years, number of years, for anybody to get their case actually listed, and people have even forgotten that they have filed the Section 138. The government is also very seriously thinking whether it is a useful tool or not. So, in on that background, when this IBC came, actually we really were very much hopeful that through IBC the resolutions will be much quicker. The timelines which were initially set of 180 days, again similar like your SARFAESI. Today, if you look at the timelines, even 2 years have passed. Where is 180 days and where are these 300, rather 700 days? Some cases are languishing there in the IBC court. So we are again heading towards the same, wherein we will be finding it, because in our legal system, there are so many loopholes, I can say, or so many areas where people can exploit advantage of those areas, and then they can challenge in the legal systems. Even the cases which are actually cases which have been agreed by corporate creditors, by CIC, those cases get challenged because the people who are bidding, they put cases and counter cases against each other, and sometimes even the promoters are going in the court and bringing the stay. So I remember when in SARFAESI, when we were going actually for the actual possessions, there was a one provision that even for the properties, when we want to take a possession, you have to take a permission of the district. Now, why this was forced? Because they thought that bankers will be actually doing some kind of rigorous actions. So to check the bankers, they put that district magistrate or divisional magistrate will give the permission. The cases are languishing at DM's table or DM's office. They don't give permission, and therefore most of the SARFAESI actions are today almost dead. So same thing I am seeing here, that whenever we are required to recover the money, some or the other corner we get some kind of surprises that, okay, this is getting halted. Now, what is the cost of that which we are actually facing? The cost of languishing of this, all the particularly today's IBC, if you see the percentage also, and it comes in the public domain. The latest figures I don't know, but very minimum percentage of cases have been actually decided. How much is the recovery bankers are getting out of this? That also everybody knows. And then extent of recovery, particularly the haircuts which are coming through the IBC decisions. When bankers were individually resolving these cases, perhaps our recovery percentage was much more. Today, any case which is getting decided, and particularly high value cases, if I'm required to take almost 50 to 60%, and in some cases 70% haircut, I think that's very unfair insofar as banking industry is concerned and so far as public money is concerned. Because when we are taking haircut, whose money it is? It is a public money, not a banking system's bankers' money or banks' money. It's a public money. So at the cost of public, we are actually supporting a resolution of this mechanism. Instead of that, they should have, now I feel that bankers would have recovered much more. Whenever we were pursuing for the recovery, our messages were, our recoveries were really much better, having much better percentage. That is number one. Secondly, as I initially said, that our banking, our economy itself is actually mostly dependent on the debts. And therefore, when the debts are there, if you look at it earlier, people may say that earlier bankers were doing, hand holding, and bankers were doing, let's say, what they say, evergreening methodologies for keeping the accounts alive. But let me tell you, that was the need of the hour for insofar as our economy is concerned, because most of the industrial units, when they were given handholding, they were properly revived. In my 41 years of my banking career, I have seen many sectors going down and again coming up. And why many sectors, and particularly the sectors, core sectors? We have seen cement sector going down. We have seen steel sector going down. We have seen real estate sector going down. But again, they are coming up. And particularly steel sector, at least 4 or 5 cycles, I must have seen that they have gone down and they have again come out of that critical situation. This was all because there were banking policies, there were regulators' policies to do the handholding. Even at one point in time, our aviation sector was going down, and all these sectors were brought up with the help of regulators' policies. Today, we don't have any kind of handholding mechanism available. Rather, people are not using the handholding. Bankers are not having that kind of I will say a free hand or even courage sometimes to do the handholding, because everybody is thinking if it goes to IBC, my job is done. At least there will not be any personal accountability against me. Whatever decision is coming, I will just implement that. So this fear, bankers should remove from their mind. Even today, now because of the suspension of IBC operations by Supreme Court, I think most of the bankers are again now pushed to go for the out of court settlements, or some kind of hand holding. Regulators, in order to check this, or in order to bring the discipline, they had cancelled all the on 12th of February. When Mr. Patel was our governor, they had cancelled overnight all the circulars of which where we used to do a lot of handholding for the small and big and all medium enterprises. Today there is no tool available for us for handholding, and therefore what bankers also do, in the absence of any other tool available for handholding, it bankers tend to actually then go for the legal course. And what is the legal course? Either you go through SARFAESI route or through IBC route, and then they keep on waiting. That is the reason today even the financial of all banks are under stress, because we are finding it very difficult to do the recoveries. Actual recoveries are not coming. And therefore, I will say IBC, even though that initial euphoria was there, that yes, IBC is going to come as a really rescue mechanism for the banking and financial sector. The way it has actually traveling, the way it is getting a lot of amendments and all, it will take some more time for it to establish itself and show its impacts or that effectiveness. I will tell you, I was there in West Indies for almost 3.5 years. I established West Indies operations for Bank of Baroda. And that country, normally when we talk about West Indies, we feel that that must be backward than the Indian continent. But there, whatever recovery mechanisms were there, I still remember, I was there from 2007 onwards. Within 6 months, we were really able to recover money from our bank. Now, look at our economy, look at our country, look at the way our economy is actually supported. When I say economy is fully supported by the loans or credit facilities from the banking, then our legal provisions should be actually providing that kind of protection first to these bankers. Then only I think that lifeline of economic, the funding support from the banking will. That's my small observations on IBC.
Sure. So Tushit and Indranil, would you like to add something as to how IBC, which was initially stated to be very progressive, and the way it has gone in the last 1.5, 2 years?
Yeah.
Do you believe that that plays in your mind while you decide about the credits?
So before IBC, let's understand what was before IBC. Before IBC came into the picture, the banker's role was to, elevate the condition of the insolvent entity, to help him out, as Kishore sir said, to involve with him, engage with him. However, that route worked at times, but most of the times it did not work. And there were different laws, different resolution plans, different acts that were entangling, the banker and the legal issues involved thereof. And there were some borrowers who were taking advantage of it. And so to overcome all that, the theoretical concept of IBC was to fast track the recovery process. And if the entity is insolvent or declared insolvent, there could be two reasons. One is a genuine insolvency. The business has gone down. And the second could be an intentional issue with the borrower. So the fast track, the intentional part of it, the IBC was theoretically introduced to fast track the process. 180 days was the timeline that it will be. It came up with a lot of encouragement to the bankers that 180 days is the timeline and it will be able to resolve the issue. But it in practicality it did not work. As Kishorji also mentioned that the one-to-one engagement of the banker and the client for a genuine issue kind of stopped. The banker positioned the case that it is insolvent, given to the collections, and then they take their hand out of it, and it is the collections management that will take the client towards the insolvency proceedings and so on and so forth, getting the IRP appointed and all that. So the purpose was to fast track and to also give a sign of encouragement to the foreign investors that yes, India is progressing, the economy is progressing towards this kind of a resolution, processing. Initially it worked, but overall, I think we still have a long way to go, for it. While it helped in the ease of business category, India improved its rankings, and the investments were coming into India initially. But eventually, that it did not work as it was envisaged. So still, I think there is a long way to go. There has to be a mixture of the current IBC and the previous arrangements that were there. So there is still a scope of improvement in this kind of process. I would.
If I can pick a couple of thoughts from Kishore sir, I think Kishore sir actually brought some really pertinent points. That's what I felt, sir. One, you said around a lack of proper restructuring tools in India, and you mentioned, in your earlier stint of your career, there were some tools available for a banker to really give that flexibility, provide that leeway for a borrower, for a company to really bounce back. Right. What do you think? I mean, this is my very honest opinion as well. I think when we look into some of the developed markets, some of the restructuring tools they have, for businesses which are not doing real well, they are very, very supportive. There's a lot of flexibility in terms of repayment terms, in terms of interest payment terms, capital payment holiday, everything, right, sir? So what do you think? What actually changed government, stand to actually withdraw some of the available tools that were already there? And now, yeah, I totally agree with you. We are not actually letting the falling businesses to revive again, which is really not a good, sign for a developing economy like India. That is one. The second one is, the insolvency process in India. Again, I mean, when I pick with some of the developed markets, you see a lot of businesses voluntarily coming up and then announcing the liquidation or insolvency. And then you have proper administrators who completes the solvency process, distribute the amounts to creditors, bankers, etc., in proportion to whatever charges that we have. So what do you think is actually stopping from Indian businesses, which they feel okay now they know that okay, we are not able to actually progress further. Why aren't many Indian businesses actually coming forward and then declaring okay, fine, we are not able to survive anymore. I think we would like to, legally proceed whatever way we can. So these, I thought, I'll pick your thoughts on this a couple of points.
See, first of all, any entrepreneur which is going through the stress from whichever sector he may be, and when I'm talking about the entrepreneur, he may be a small entrepreneur having, let's say, 10 lakh, 50 lakh turnover or 1,000, 2,000 turnover. They know their industry, they know their unit very well, much better than anybody else. We are having this phobia in our mind, or we are having this, what I can say is a fear in our mind about accounts becoming NPA. And it has become like a stigma that if an account becomes NPA, that means practically it becomes untouchable. And all the bankers and financial lenders particularly they throw it down like a hot potato. Everybody forgets here that when any business is set up, actually we are the majority shareholder in the business. The 25% or 30% capital is brought by the entrepreneur. 70% is actually funded by us. So being a majority shareholder, it becomes our duty to see that our shareholding actually is protected properly in the business. And therefore, pushing them to the legal framework which already are weak is not a greater solution, except that it protects your own skin, the banker's own skin, not bank's own skin. The bankers feel that okay, if I push it to legal framework tomorrow, nobody will question me, and that is more dangerous trend which has set in our banking industry, and therefore bankers today actually become indecisive. There are no decisions being taken in the banking industry for stress resolution. Even though there is no stress resolution mechanism, we know for sure our inner conscious tells us that this gentleman, if he is done given a hand holding, he can definitely recover. They come and they plead in front of us that their businesses can be revived, and existing businesses itself are revived, because look at how much capital is deployed already in all these units. What we do through legal framework, and particularly again this is becoming a trend to buy the units at the throwaway price. Who is buying them? These are all sharks which are already having a huge capital with them. Their balance sheets are very strong. And who is supporting them? The funds are coming actually from all over the world, because there is a lot of liquidity worldwide also. When outside you are having a negative interest trends, the money is flowing to India. And these are the good assets which are actually bought at the throwaway prices. Very big names, marquee names, because this is the general discussion, so we will not discuss about the individual names. But many of the uh, good units are actually bought at 30 and 35% of their value. So who is getting benefited and who is getting lost? The loss is obviously of the public in general, and the benefits are all of those capitalists who are actually bidding. And this process is a continuing. So in my opinion, if public interest is to be protected, there should be both options open. If this option of handholding is not really working, and today when entire economy is going through such a stressful situation, there cannot be, we should not bring in mind that somebody is having intentional defaulters. As someone was telling, I think Tushit was telling that uh, IBC's main intention was to actually penalize those who are who are willful defaulters, and intentionally they are having means but they are not paying to the bank. But today the situation is totally different. Majority of the entrepreneurs are really having their own difficulties in making the debt payments. So when the debt obligations are not paid, and in fact our this phobia of declaring account NPA had gone to such an extent that one of our regulator had even said that even one day's default should be actually treated as NPA. The country which is having a developing economy, where our all other pillars of the economy are still evolving after our independence also, lot of things are yet progressing. Our economy, which was supposed to be agrarian economy, today look at the agriculture sector, it is totally weak. Our economy then became a service industry, then become a manufacturing industry, but all of these are today actually going through a difficult situation. We used to have, because our economy was evolving, if you recollect, there was something called BIFR, there was something called CDR. All these mechanisms were actually helping the good industries to come out. And when I was heading IDBI, I was also heading CDR cell, and I was also heading BIFR cell. And I know under CDR cell, there are so many examples where the industries have come out of CDR and they have paid back to the bankers, because under the CDR, they were actually given the legal protection, and they were given the uh, rather hand holding with the long-term support. Now, situation has come back. We have come to that level again, wherein every small, medium, or big unit requires a long-term support. And if that long-term support is not given, then it is very difficult to revive. That long-term support only bankers can give. No legal framework actually will direct the bankers that you give them the support. And therefore, instead of running towards the legal framework, if we use this mechanism of handholding, And regulator also, you see, there is to be a lot of special dispensations given to a particular sector. Now, even KV Kamath committee has declared 27 sectors as a stress sector. The regulators can definitely come out with some kind of a special dispensation for these sectors instead of just saying that, okay, these sectors can be again provided debts and again they will be coming out. Only debt will not help. The existing debts, when they are unsustainable, then you need to identify what is the unsustainable portion and how the restructuring mechanism will work for them, that viability of the business will be established and money also will be recovered. We used to even convert a lot of debt into equity, so the portfolios of the borrower itself are improved, the pressure is reduced, and there are n number of cases where banks have made money, particularly those banks who were in the development finance activities. I can name some of the banks like ICICI Bank, IDBI Bank, State Bank of India, Axis Bank. Wherever we have done the DFI methodology is used for funding, which was mixed with the equity and the debt, I think banks also have made money. So we need to understand, okay, how best we can support the industry, how best we can actually do the handholding for them. And therefore, all these earlier mechanisms which are there, all the circulars, if you see some 10, 12 schemes where overnight they were cancelled. Even you introduce them with kind of let's say whatever lacunas were in those schemes. Let regulator correct them and reintroduce it. Who stops them? But if we say no, we will not do the handholding, we will not give any special dispensation, and we will just create a liquidity in the market, we will induce people only to take the debt, it's very difficult to revive this economy. So, in my opinion, we need to learn from this pandemic. We also look back into the track records of our earlier schemes, see how the economy was developing. If our economy has come to number 5 during these last 60, 70 years post-independence, we are now boasting that we have become a number 5 economy, and we are talking about 5 trillion economy. Then we also need to understand that the systems and procedures which were there in place, definitely they were supportive of this kind of growth. Just out of knee-jerk reactions, if we start saying that no, from tomorrow onwards nobody will get the handholding, and all these entrepreneurs are willful defaulters, and therefore a legal action has to be taken. I think this kind of one size fits all approach is not. We need to do a lot of handholding. Our economy is still a developing economy. It's not a developed economy. The methodologies which are used in the developed economies will not be actually applicable or will not be successful in our country. Look at the nature of our country, look at the fibers of our economy, and take the steps for revival of that economy. That is my simple suggestion.
So, Indranil, would you like to add something?
No, I think all the panelists have touched upon all the major things. I wouldn't take more than 1 or 2 minutes. I think the first thing is intention versus execution. The IBC is a code where it tried to bring under one parameter, one umbrella, many distraught things for the benefit of the community, the business community, we are part of the global system. So I think Tushit touched upon it, saying there was a need for that because we had to show ourselves as an attractive destination where the end delinquency laws and arbitration rules and where the courts come into the picture, it can help solve the problem in a much more efficacious way, which the world is known to. So it tried to bring everything under one. Second aspect I would say is, again, with Tushit and both Kishore also touched upon, is willful versus capacity to pay and willingness to pay. If capacity not being there to pay, IBC can help, anybody can help. But if there is no willingness, no amount of law can actually help. Third aspect is, if I see why India is so strong, is India gives a fair opportunity to every litigant to the nth level of justice. And therefore, obviously, IBC is going to take that much of time because every litigant must have its full share of available justice mechanism to go and knock the doors. And finally, see, if the intention is good, if the execution is not good, And as all the panelists said, if we are still stuck at that place, obviously something is wrong somewhere. As Kishore ji quite rightly said, it is not that if something is not working, we just throw it out and bring something in. You need to repair it, maybe. And we are having stalwarts of the industry who has seen things happen, go through, they know what the real problem was. So if we could have unplug those problems and make the earlier laws a little more attractive, maybe it would have been better. So that's all I would say. Good intention, but again, we are stuck, as we know, with what we have at hand.
Sure. So moving on, another observation which I think some of you have alluded to in the answers to your previous questions is that we have one set of corporates who have had easy access to capital and also credits and debt. And then we have another set of, perhaps in numerical terms, is a larger number of companies and maybe perhaps in medium to small sector, where they do have demand, they also do need money, but they are hesitant to approach the banks for some reason. So in some sense, is the market now kind of divided between those haves and have-nots kind, and is this a new kind of inequality that we see in the market in terms of access to credit? What would you comment on? I mean, how do you see this? Maybe we can begin with Indranil.
Thanks. This question has all the ingredients of being to answer politically correct, because in a vast country like India, where we have very strong rules and laws and codes, there may have been cases, what Dipesh is saying, but I wouldn't still say it's the general trend. I think that deserving gets what it wants. Of course, the stronger you are, you get that much more voice in the negotiation, in the market. You call the shots, and it is the order of the day. I mean, the big eats the small, the big gets its way, and economic world is no different. So if I have a very strong balance sheet, if I have very diversified portfolio of products, services, the confidence which the lender will have on giving credit to me will obviously be much more than if I am a smaller entrepreneur who has a more I would say one type of portfolio which is prone to a little bit of more fluctuation and risk than a diversified one. This is the order of the day. I don't think there may have been cases where what you're saying is right, but I don't think it's a standard observation. India still goes with if you can give a good business case, the credit is out there. But again, I still believe that credit might be out there, but finally it has to be a wow in the market. Without a market and people taking it, no lender will lend money just because I think my idea or my service or my product is going to be wow. And that's where the big corporates can come out and show their history, where they can say, well, I did this, and well, I'll do it again. So that trust, that history, that success is always behind them, which is allowing them to get more share of what they're asking for. But we have entrepreneurs. There are a lot of government initiated measures taken where smaller entrepreneurs, green shoots, local players are being asked to take money at very easy terms, both interest as well as repayability. So I think the thing is out there, but I wouldn't go with a standard thing that it's a little wrong.
Tushit?
Yeah, actually, I think the reverse actually. So I think there's, as Indranil rightly pointed out, the banks still go for meritocracy as compared to large versus small. So enough examples are there. They are opening up of MSME verticals in almost all the banks. So there is enough, scope which the banks see the next growth level for them could be the MSMEs. Because of the sheer diverse, businesses that the MSMEs have. Also, if you see the government actions towards this emergency credit line in this COVID times of 3 lakh crores, that was also targeted more towards the MSMEs and to let them revive their businesses due to the pandemic. We have seen a lot of NBFCs which have come up for especially for MSMEs. So I see overall there's a lot of focus on the MSMEs, and I don't think there is large corporate gets more and MSMEs there's any disparity and as such. To give you an example, there was a startup, loan mela started by the government a couple of years back, which is a 59-minute loan to, MSMEs was launched by the government. So all these, steps shows the government's intention and, that they want the resilient or the Atmanirbhar Bharat to, really take off, flag off, and, MSMEs are the forefront of that initiative, I think.
Chaitanya?
See, I think access to capital in India, I think primarily, I feel one of the major challenge is corporates have easier access to more, channels of funding, banks, capital markets, etc. Whereas smaller enterprises typically they rely primarily on the banks to fund for their requirements, which can be which is pretty costly, right? I mean, and that is one of the challenges. I mean, as Kishore sir was saying, they are unable to repay the current debt, but then they obviously they will not be able to afford to raise more money. I think more players, especially in the SME division or SME division, PE players, I think that is what India needs, where they can actually support the business, smaller enterprises to really, survive the initial stages and then, establish themselves as, big players. That sort of support, I think there is a scope for a lot of improvement in India. That is my personal feeling. Otherwise, you will see a lot of businesses, starting up, not able to cope with the costs of, especially the capital, the debt cost that, that we have in India. And also, you don't have a lot of bespoke products, to offer in India. Typically, it overdrafts or, term loans, which are pretty costly and may not be very effective for some businesses. I think market requires, I think, some capital market players who can actually support, entrepreneurs and small enterprises. That is my view. And of course, I mean, this is always the case, right? I mean, bigger guys have that financial muscle. There'll always be some consolidation as industry evolves, etc. Those things you can't stop. I mean, that's how the market is. But I think from a government perspective, from a regulator perspective, I think they really need to look into, how can actually they make smaller businesses, sustainable. Invite more, PE players into the market who can really, support those businesses.
Sure. Kishore, sir, your views.
I will say that both actually small and big are very much essential for our economy. If you look at the ingredients of our economy, actually who are the drivers of our economy, particularly the MSME, agriculture, MSME, retail loans, these days affordable housing loans, or even affordable vehicles, affordable automobiles. These are the basically, rather traditionally, I will say, the drivers of our economy. And because they are actually end consumers. So they are required very much to be strengthened insofar as that. So therefore, we cannot say, and on the other side, there need to be a big industries also, because when you talk about let's say MSME sector, it's my personal observation that 40% of the MSMEs are actually dependent on the big industries. They are either they are ancillary units, or they are the suppliers, or they are the buyers from the big industries. So the larger chunk of them is actually dependent on the big industries. So big industries are also equally required for us. Big loans giving for the infrastructure, for the industrial development, still it is required. In fact, many years we have been talking about infrastructure to be brought under the priority sector lending, because that is a priority for our country. Here, our let's say our cities are, developing, rather increasing, like anything, the habitation of the in cities, but infrastructure, even social infrastructure, is not getting developed. These kind of social infrastructures, now the government is talking about, giving the priority, but who are the players behind them? who will be doing the industrialization, who will be doing the infrastructure work. They're all big players. This is not the cup of tea of MSMEs or even the individuals. So therefore, we need big people also, we need small people also. The question only comes that when you lend small people, let's say MSME, then the amount of the credit facilities is smaller. When we lend to industry or big infrastructure, the amount of credit facility which is given is a much bigger. So people start comparing when you are giving MSME, you are giving only this much, and for the big players, you are giving that much. That comparison itself is, I will say, incorrect comparison. If you look at the entire portfolio of the credit deployment of the country, and Reserve Bank of India data will reveal it more, I will say that industries or corporate credit is definitely not a larger one. The corporate credit is actually much lesser. It will not be more than 30 or 35%. Rest all 70% is actually given to other than corporates. So therefore, for the economic development, we cannot say on one side there are haves and other side there are have-nots. It is optically it looks like that, but as everybody knows, smaller players cannot go to capital market because of their eligibility itself and their financial strengths or the information system which is available. The capital market also does not recognize the small players. They recognize only the big players. Therefore, the avenues which are available to the bigger players are more than the smaller players, and smaller players are required to be dependent on the traditional funding systems of banking and finance. And even in some of the remote areas, you won't be rather surprised if I say that even today money lenders are prevalent, and many times we get these news from the hinterlands of our country, how the havoc these money lenders have made, and how they have actually they have been killing our economy. Even today, there are many MSMEs which pay almost monthly 2%, which works out to 24%. Even though we have developed a lot of small MFIs, we have developed NBFCs which are reaching there. We have developed a small banks. Even then, if you look at the financial inclusion situation of our country, financial inclusion doesn't mean only opening of accounts. We have done wonderfully good job insofar as financial inclusion is concerned. Our country has covered almost every and each corner by different network, including where we are not reaching. We have reached there through banking correspondent network. We have laid that infrastructure. But only opening accounts and giving them access to the deposits is not a financial inclusion. Giving them access to the credit and a cheaper credit, that is very much essential. Today also in my rural areas, people are borrowing at 36% to 60%, which is actually not supporting the development of that particular area. So we need to create some systems, and in between there were talks of even co-generation with along with NBFC. Big banks can actually co-generate with NBFCs, co-generate with MFIs insofar as lending is concerned. I think the regulator also need to sit together and work some kind of mechanism for this. It should not be left only to the banker that you work out some formula for co-generating, because banks are definitely not having reach to that hinterland. They don't reach up to that segment which requires a credit. If the players like MFIs, or there are many NGOs also who are actually supporting development of rural area. So we can take help of such players and take the credit to the rural area. And when I'm talking about the credit, it has to be a affordable credit, and it has to be an affordable period also, because when you go in rural area, they don't have long-term credits. In fact, when they are borrowing from MFIs, when they are borrowing from NBFCs or even money lenders, it is a short-term lending, and it is a cost is very high. So even though today, because of the sheer structure of our lending or funding patterns, it looks like it is a only haves or have-nots. But in my opinion, both are having their own strengths and weaknesses. We need to recognize them, and we need to strengthen both the systems. Thank you.
Sure. Thank you so much. So now one last question from my side before we open the panel to receive questions from the audience. And that question actually has two parts to it. One is basically your opinion if we can see some green shoots, so to say. Today morning also I was talking to one of my friends who works with one of the largest players in the industry, and he was talking about how the demand has picked up and the company is unable to cope up with the rising demand. So do you foresee the green shoots coming now in truer sense? Although I know, green shoots have been talked about for last 3-4 years consistently. Everyone keeps talking about seeing the so-called green shoots. So do you see them now? That's one. And secondly, since the webinar has been organized by student body, so something which is more relevant to them, how do you see this channelizing into employment generation and prospects for MBA students in this year itself? Most of the MBA students, particularly in this year, those graduating in the next 3-4 months, have had tough times thinking about whether they would get a job or not. So how do you foresee the next 3-4 months? How do you think the banking sector's recovery, and whether they will employ larger number of people as MBAs are expecting?
Dipesh, let me go in here because I have a great confidence in our economy, and our children, these youngsters also should have that kind of confidence, because our economy is extremely resilient economy. What is the best part of our economy is it's not dependent on any particular sector. Rather, the strength of our economy lies into multi-sector economy. When I'm talking about multi-sector economy, not particular economy, you see some of the countries who are having their dependence on particular sectors, like they may be having dependence on oil and gas, they may be having dependence on the tourism, they may be having dependence on, let's say, mining. So just a few sector dependence economies are actually very much vulnerable for actually collapse. Whereas our economy is actually a multi-sector economy, and therefore it has a lot of avenues for keeping on kicking itself. Secondly, the strength of our economy is also its population, its variety of population, its quality of population, and the thirdly, the consumption patterns of our economy. The uh, strength is also in the population, and the strength is also consumption, because any economy which is growing, if it doesn't have a consumption patterns, then I think there will not be any economic growth. Some of the developing countries, particularly in European countries also, if you see, some countries are having a good economies, but there is no consumption, so they are required to depend on a lot of exports. And unless the exports, and therefore many countries where during this pandemic, when the exports were halted, they were much more impacted, whereas India was not impacted because we had that internal consumption. And therefore, I really admire the way the government of India has come out with this Atmanirbhar Bharat slogan, or Atmanirbhar Bharat idea of making it a self-sufficient country. We are actually, and we should strive towards that. The green shoots are definitely there in the economy, because, as I said, without consumption, no economy can show any green shoots, and that consumption is very good in our country. The consumption may be at different level depending on the earning capacity or saving capacity of the people, but definitely there is a consumption. There is a need for development of economy, which is being taken care by regulators, by the government also. So opportunities for the youngsters will definitely crop up. Now, when I said it is a multi-sectoral, unfortunately, what had happened, the youngsters were selecting only the engineering, only the medical streams, or only certain few streams only. Then it becomes difficult, because there are matchmaking is very difficult insofar as employment opportunities and your profiles, the way you are developed. So therefore, many times we feel that there is unemployment, but otherwise unemployment is can be addressed. Headcount wise, if you see, almost everyone can get employment, and everyone can get adjusted, provided we are ready to to take up the job which may not be suitable to our profile. I'm not suggesting that you should go and forget our profiles. Your profiles, another strength of our economy or of our youngsters is the quality of education they are actually taking. Our country has actually, if I recollect, we used to call a snake charmer country. But today, if you see, it has become from snake charmer to we have become a mouse charmer. And in fact, technology-wise, we have developed so much, not only technology-wise in the medical sector also, that almost in the developed countries also, people are depending on India and Indian support systems. Even if you go in developed countries like America or any European country, you will find more technical people from India, more doctors from India. So these are our strengths. The way economy has started showing up some green shoots, all the industries which are there, they will start actually again firing on their all cylinders. We are just, all of us are just waiting for this pandemic to get under control. Unfortunately, we are looking at the second wave. Many of the countries are looking at the second wave, but at the same time, there is a silver line that we are also having. These vaccines are also available, going to be shortly. So it's a short time, I can say, another few months. But after that, once this pandemic is under control, economy of our country is going to be actually bouncing back much faster than any other country. That much our youngsters should have faith in the economy. And once we bounce back, all of you are going to get the employment opportunity. My best wishes to all the youngsters actually. Don't get disheartened. There are opportunities, but this is a time to hold your courage and look forward for the better future.
Great. Yeah. So Indranil, I think you're like expected to leave by 6:45. Huh? So I would give you this chance, maybe perhaps as your last words before you depart.
Thank you, Dipesh. Thank you, Kishore and Tushit, Chaitanya for giving those wise words. The last question is about green shoots. Yes, absolutely. Green shoots are visible. I'm just hoping that it's not just because of the festival-led spending habits that we sort of try to have. Diwali is a time when a lot of people buy stuff. It has to be sustainable. Then the green shoots will become deep roots and big trees. That sustainability can always come. I think we are all agreeing through a constant and continuous employment generation. This, if the wheels start moving, we will go to that green shoots and the big trees. As far as the second part of your question, sir, about employability in banks, yes, there has been a constriction in the intake of people in banks because of the COVID scenario. But the silver lining that Kishore just talked of nothing is permanent. So obviously this problem will also not be one. So you will have lots of opportunities to get into good banks, good organizations. And I would just say in cricketing terms, just keep your wicket. That loose ball will come when you have to hit that six once you're out there in the market. Keep your wicket. The wicket is nothing but get your degrees. Just be out there and you will hit it out for a six. Good luck to all of you, and thanks for listening to me.
Sure. So you can hang around as long as you can, so that if you are able to spare some more time, maybe some questions will come your way. So now Chaitanya and Tushit, maybe one after the other. Your views about green shoots, yeah.
Yeah, sure, yeah. See, obviously the stats are looking very encouraging, right? I mean, I was reading the GDP growth rate, I think, which was earlier forecasted to reduce by more than 11%. I think now they have repeated it around 10 point or something. The last quarter is expected to be more promising. The next year is expected to be really promising. I think what we are expecting is around, I think, close to 11% growth rate. That is something I think which we have not achieved after Q1 2010. Definitely, see, I mean, you can't have economy like this forever, right? Consumption will pick, demand will pick, economies will bounce back. Across the globe, all the leaders, all the countries are taking a lot of measures in order to ensure economies are going to bounce back as quickly as possible. And of course, the healthcare companies are trying their best to bring out the vaccine into the market. I think, see, I know this will be, you will all be very anxious, I was a 2010 pass out. I think I saw my seniors in 2009. I think they had the worst time, but then they're all very settled. They're all doing extremely well. They're into what they wanted to do in terms of career. And 2010 was also linear, but then most of my friends, they're doing extremely well. So I'm sure you'll also do well. It's just that have the right skill set, guys. I think to the students out there, be confident, be optimistic, and then have the right skill set. That's all I can say. I think stay very close to your faculty. They are the ones who are, who have had, a lot of experience in the industry. They know what is what is going on in the industry, what is the skill that is currently in demand, right? Hone those skills. Be ready. I think that's all. I think there's no way, nothing can stop you. I mean, if you have the right skill set, you are in the right market. I mean, whenever my cousins and my friends talk to me, if you can't find a job in India, you can't find anywhere else. I mean, if you can't find a job in a market that is growing at 11% next year, there's no way you can find a job, right? So just be that should be the attitude. And then just the right skill set. That's all I can say. Have the right skill set, you'll do extremely well.
Shit.
Yeah, so firstly on the green shoots part, certainly there are a lot of positive indicators that we all can see with the, we may call it a pent-up demand, but I think it is going to remain constant with the vaccine coming in. There are news of vaccine coming in shortly in 3-4 months time, and then we are seeing even the initiatives by the regulators, by the government towards building back the economy, which is we all kind of acknowledge the fact, and we all are proactive in taking steps towards rebuilding or kind of reviving the economy to the pre-COVID levels that were there. So just a few indicators which are very positive, which I want to tell the students of IBS Hyderabad as well. Infrastructure, e-commerce, healthcare, IT sector, everywhere you are seeing the foreign institutions wants to put in the money. So which means the India story is still very hot, and everybody wants to take an opportunity for coming into India. So there'll be enough and more opportunities for the students eventually in the job market as well. So there's no need to get disheartened, or of course the times are challenging. But I think, as Chaitanya rightly said, if you can't find a job in India, you can't find anywhere in the world. So there'll be enough opportunities coming up, and there'll be enough new models. While we may not have the old models working now, there'll be enough new models that will be coming up where you all can fit in. And as the panelists said, just hone your skills, just believe in yourself, and I don't think there's any dearth of any opportunities that you'll be getting in the Indian market.
I think Indranil has to leave. So thank you so much, Indranil, for your lovely comments, lovely opinions, and I hope you had a good time too. Thank you for your contributions. Good luck, and hope to keep in touch. Thank you. Yeah. Okay, so now I think we are just about 10 or 12 minutes short of 7 o'clock. I think that was the time that we anticipated. So I would leave the forum to questions, and I think Shravan can perhaps anchor questions from the audience, please.
Sure, sir. We have a question from Sai Sadvik, which goes like, there is a constant injection by the government into the economy. Keeping this in mind, can there be any situation where the credit available is more than its demand?
I think we did discuss part of this question where we talked about how the government has been focusing on supply side of credit rather than there's very unlikely that government can actually induce demand in the credit side. But I would perhaps request Chaitanya and Kishore sir. They were the ones who talked about this.
Yeah, I mean, I think we discussed a lot about this, right? I think there's a lot of liquidity in the market. I think it's just that the demand for it is what is not seen. I think, and as we discussed at length, I think it's the right set of products, that needs to be made available to borrowers. It's just not the money. I think it's the right structure of the money, right term, right at right cost, right? That is more important, right? I mean, I think, see, all over the world, there is, I mean, you see there's a huge amount, spiky liquidity. Banks, uh, if you see the balances of the banks, I mean, they're growing by more than 10-11%, whereas the credit growth is only at around 5% in the last 2-3 months. And of course, a lot of large corporates, as I said, are leveraging or trying to take advantage of the capital markets, where you have lot of cheaper finance available. We are already in that sort of situation. I think, see, it's just that the economy has to really bounce back, and that stimulate that demand for the actual credit growth. That will be key going forward.
Kishore sir also talked about this quite at length, so I think I would let you go to the next question, Ira.
Okay,
Sure,
so
sir. The next question
Yeah, I think you should give a chance to Varshini.
sure, sir. Thank you. The next question is from Siddhartha. What are the qualities and skills that one should be possessing in order to pursue a career in risk management or risk assessment? What kind of technologies would you help a student or a fresher to pave a path towards a career in such fields?
Tushit, would you like to take that question?
Yeah, for the risk management, it is overall the credit information and the credit knowledge in terms of what you're already doing in your CFAs and MBAs, and also chartered accountants. These basically are few fields that ultimately pan into risk management. And there's a lot of I would say I have myself done my MBA in the field of finance and marketing. But I have been doing risk management also for my bank. But it is also a lot of on-the-job learning, and what you all develop by being on the field and on the job. So I think that kind of a knowledge, that kind of an internship, if you probably can do or attain some courses on the risk management, on that will be much beneficial for the students.
Chaitanya, would you like to add something?
Yeah, to what is already said. I think we're seeing a lot of focus on the analytics, credit. I mean, credit analytics. When I say credit analytics, pure analytics. A lot of banks now are trying to leverage on analytics, for much more informed decision making, much more faster decision making. Right. I mean, see, when you lend, you're not lending at risk free at all. I mean, you are taking a risk, right? How objectively you are evaluating the risk, and how objectively are you assessing the risk is what, and how robust are your systems. That all determines. I mean, as a bank, when you have these sort of situations, a good bank will be differentiated from a bad bank in these systems. And so I think to students out there, I would say, try to learn some, analytical the data analytics languages. They are much in demand in the market now, even in risk world. Whilst we have like teams like credit appraisal, credit risk assessment teams, we have huge risk information systems and teams working on those systems, trying to build some models, trying to get the data, and then feed into our decision making process, etc. So try to learn something on that side. That will really add advantage for you if you really want to have a career at the risk world.
Kishore said something from your side, perhaps some skill set which may even have longevity. I think there are some times when we want to actually do something and we see that in 1 or 2 years that skill set becomes obsolete. So there could be some kind of uncertainty there. So What's your opinion, people from those who are looking to pursue a career in banking, what kind of skill sets would be relevant and of course may have a little bit of longevity as well?
Yeah, Dipesh, as you rightly said, actually the risk perception keeps on changing from time to time. In 70s, when we were doing banking, the risks were different. Today, when you are talking about banking and finance, the risks are different. In my opinion, the more and more analytical data comes to us, the more and more risk perceptions actually we start developing, and then we start building the guards. But even then, today, whatever you say, I have seen many of the crises in the banking industry, and more recently for these young students, at least, because if I talk about 70s and 80s, some of them may not be even born at that point in time. But today, if we give them the examples of crisis in 2008, American meltdown, or crisis in 2011, where European meltdown was there, and what are the lessons we have learned from that? Now there is something called Basel Committee. For all many times we get a lot of guidance from the Basel Committee. So they also kept on changing their guidances because every time the new risks were getting emerged. Now, this pandemic again has given a really a twist to all those risk perceptions. Now, whatever risk models we must have developed earlier, they are all actually blown away by this pandemic. And today we are required to rethink about what kind of risk models we should develop. But insofar as these youngsters are concerned, I will again say, as Tushit said, your those skill sets have to be agile. You cannot learn something in the classroom and come and start applying here. And but on the job, whatever risk you are facing, every time you will have to develop, and that is your hunch actually, your hunch, your common sense. What we have seen, which remains perpetual, is your abilities to analyze the balance sheets, your abilities to analyze the feasibility of any of your project. The project may be of small 5 lakh or 50 lakh, or the project may be of 5,000 crores. Once you have analyzed the project properly, that its strengths and weaknesses, I think that is more sustainable. So credit analysis is basically required for that. And when we talk about the risk analysis only to enhance our decision making, but that should not overpower our decision making itself, because many times people become risk averse. Once you start knowing risk, more and more risk, then people stop decision making. Today, what we need, or any country needs, is a decision makers, not a risk averse people. So while understanding the risk is essential, that please use that only for improving your decision making skills and not to scare you for decision making. So understand the risk. Definitely there will be a lot of risk. Any business you go, there will be risk. But just because there is a risk, it doesn't mean that you should not go and play. You should not go and actually take on that risk. If you talk, somebody spoke about the loose balls in the cricket, I will say why the cricketers like Sachin Tendulkar or Brian Lara or Sunil Gavaskar, or even these days Virat Kohli, why they are called the best players, why they are called the legends, because they know the techniques, they have understood the what are the risks coming. But when they go on the field, every ball, when they look at it, they take the decision after seeing what kind of ball is coming. If they apply pre-decided shots for the ball, obviously they're not going to succeed. Secondly, all these players, why they are called legend, because they have performed in all circumstances, all challenging times. It's not that they have played only on the Indian pitches. They have played in the South African pitches. They have played in England, they have played in New Zealand, they have played in Australia. Whichever pitches are there, whichever I will say circumstances are there, climatic situations are there, they have proved their mettle. So you need to acquire those kind of skills wherein you must have learned something in your classrooms from your textbooks, but when you actually go in the field, you need to just take some clues from that and not to stick to the classroom skills. You need to and keep on enhancing your risk taking abilities. You need to keep enhancing your learning of the risk on the field, and that will make you a better decision maker.
Just to add one more point, Dipesh, before we move to the next question. From my practical experience, I can tell you that, as Kishorji said, what can be the longevity from the viewpoint of longevity is learning to read the balance sheets. If the more practice you do on the balance sheet in evaluation, the longer it will go with you. That skill set nobody can take away
Yes.
from you. So, there are sites today which give, balance sheets of almost all the listed companies, unlisted companies. Go through them. As a practical experience, what we used to do, we used to compare balance sheets of companies doing well and companies not doing well. What is the difference in their different approaches that they follow? So that could be a few, practical, things which you can do before you actually, go to the corporate world. So that skill set, just hone those skills of yours of analyzing the balance sheets thoroughly. Secondly, also on the digital side, while we discussed credit in the last 2 hours or so, what is now also evolving in the credit is the digital lending a lot. So there are a lot of digital tools available which one can go through, and that is the way forward for at least the MSME and the consumer lending part. We see ready to take loans, ready sanctions for the consumers, be it their home loans or personal loans. You will see your senior colleagues, they'll get a message from the ex-bank that you're eligible for a 5 lakh personal loan, you're eligible for a 50 lakh home loan. So that is something which is on the digital side. The institutions are working a lot. So there are a lot of digital tools available, which Chaitanya also mentioned, briefly. That please, if possible, go through those digital tools, and you'll be able to, adapt to a newer, credit evaluation process. Thanks.
Great. So I think we have run out of time, Hirak. I think we may not be able to take any more questions. Sorry for that. But as we conclude, let me take this opportunity to thank each one of you. Chaitanya, Tushit, and Kishore sir, it's been great talking to you. It's a lovely experience knowing about your inside view and experiences. And of course, I'm sure it is going to be huge learning experience for all the students who have logged in. So thank you so much for your time. It was really great talking to you. Over to you, Hirak.
On that note, Deepak sir, we, on behalf of Money Matters Club, would like to extend a vote of thanks to all our eminent guests and faculty members for their presence and support for the evening. It was really an insightful session. We are able to learn a lot from this.
We would also like to thank our club mentor, Dr. Narasimhachari sir, and we would like to extend our gratitude to our student activity coordinator, Madhvi ma'am, knowledge partner, 4Vision, our promotional partner, IBS Messenger, and coverage partner, Newswire.
We hope today's Financial Collegium provided you insightful knowledge and useful platform for sharing ideas and getting your doubts cleared. Thank you, everyone. We hope to see you in our upcoming webinars and events. Have a nice day.
Thank you so much, everyone.
Thank you.
Thank you.
And all the best to all the students.
Thank you.
Thank you, Kishore sir. Thank you, Sushant. It was nice interacting with you. Thank you, Deepesh.
Thanks, everyone. Thank you. Bye-bye.